Welcome to today's morning report on Wednesday the 1st of July with me, Rich Perry, market analyst at Tantec Markets. The European trading session has got actually decent start actually. First trading day of the new quarter, the new half, and it's a pretty positive move at the moment, about 0.6% up on these European markets. Just drifted back from 1% higher just about 5 minutes ago, but still fairly positive. However, what we have seen overnight is Greece that has now missed its payment to the IMF. That 1.6 billion euro payment that it's been owing on the 30th of June missed the payment, and that's now means that Greece joins a pretty exclusive club of just a handful of countries that have missed payments to the IMF. And not only that, overnight we had a third bailout request actually coming through from the Greeks, and that was pretty much dismissed out of hand. Obviously, they're not even through the second bailout yet. That's what all this shenanigans over the 7.2 billion euro final tranche of bailout money was over. They're now asking for a third. So, I mean, Merkel's just dismissed that pretty much out of hand. She's saying that the referendum, before the referendum is held, there's not going to be any real movement now. So, it'll be interesting to see what happens in this referendum. But what we have seen overnight, markets settling down, and if I show you the German Bund yield, certainly settling down. Look, very much settled compared to the massive volatility that we saw on Monday. Settled this morning. Also, Spanish yields are starting to come lower. So those that yield spread between core and peripheral sovereign debt in Europe beginning to come down again. Interestingly. Watch out for the VIX. VIX volatility, certainly in the US, spiked higher on volatility in the US spiked higher on Tuesday, and it's starting to come down a bit. And if it starts to fall away, you could imagine that is another reason why equity markets will rally today and in the coming days. So watch out for that. In terms of the dollar index, it is fairly sort of settled over the last few days, starting to push higher though, because the euro has just started to fall away slightly, back below a little bit of support, 11.30. I'll talk about that when I look at the euro charts, but certainly that dollar just starting to gain, and that is coming ahead of a load of key US data that we've got in the coming days. So that is interesting. This data starts today, but what we've got is the European. Well, first of all, overnight we've got all the PMI data that comes out on the first of the month. China's just slightly missed expectations, but sluggish in its recovery. The official data is 50.2, the unofficial HSBC 49.4, both slightly missing expectations. So that recovery in China just still a bit sluggish. Eurozone, again, it's a bit of a sluggish move on the Eurozone. France, slight miss. Spain missed. Italy, a slight miss on its PMIs. And Germany, in line with expectations. So pretty much across the board, the Eurozone recovery in the PMIs that we've seen in recent months is just sort of losing a bit of steam, just rolling over a touch. So maybe that's Greece that's impacting across those markets there. At 9:30, we've got the UK PMI, which is forecast to come in at 50.2, so slightly higher than last month. So that would be a second month of a move into a more positive frame of mind there in the manufacturing sector in the UK. And then into the afternoon, we've got all this key data for the US. Starting off with the ADP report, actually, because the ADP report, some see that as a harbinger for the payrolls report. Not so much last month, but still, certainly there was an improvement, but nowhere near as strong as the payrolls report. ADP forecast to come in slightly higher than last month at 218,000. There. Then we've got the ISM data, the manufacturing PMI for the ISM in the US, expected to come in again a slightly higher, 53.1. Now that would be a continuation of that improving trend. That the PMI in the US fell for 6 months in a row, or certainly didn't gain for 6 months. And then last month we had a positive move, and today, if that comes out again positively, that would certainly give the dollar bulls something to cheer about, because that would be certainly giving the the Fed even more excuse to look at possibly tightening. And then finally this afternoon we've got the oil data, the oil stocks for the US, and that is expected to come in around about again negative of 2 million barrels. So that is interesting as well. So oil supplies or oil inventories continue to decline in the US. So that takes me to my chart of the day, which is the Aussie dollar. Now, Aussie has been interesting actually, because we've had these 3 days of gains, but I think these 3 days of gains are just going to give you a nice little opportunity to sell again. The price was supported yesterday by a move on a breakout on the Aussie Kiwi cross above 113, but interestingly enough, the Aussie I think is now unwinding back to a position at which it's going to be a selling opportunity. The RSI again just unwinding back towards that 50 point, and I think that will be a chance to sell. Just unwinding some of that oversold momentum of last week. And I think this is a bounce that we can sell into. Now, this is the hourly chart, and you can see on the hourly chart there's a consistent sort of pivot level resistance around 77.50 that had been resistance, became supportive, and is now once again resistance. It's sort of rallied to 77.40 and fallen away. You do have this uptrend on the Aussie. I'm interested in the fact that the hourly momentum signals are not all that great actually. I would like to see that RSI much stronger than that if that was a proper bull rebound. Also look at the stochastics in a bit of a bearish divergence here, with a lower series of highs coming as the higher highs have pushed through on the Aussie. So if we start to see that Aussie breaking through that uptrend support, it could well be a signal that move is about to come to an end, and certainly it looks like it's going to be putting pressure on that uptrend today. So 76.80 is the initial support. That's the old sort of support that we had. It became a bit of resistance and then supportive again. So that is now certainly a bit of a support that you will look out for. If you see it trading below 76.80, I'd say that is a bit of that could well be your sell signal. As I said, this rebound in the MACD lines and the RSI not all that great. You'd certainly want it to be much more positive than that if the bulls were backing this rally. So I'm expecting this rally to fall over between here and 77.50, giving you a sell signal, and then coming back to retest the lows as well, because I see that this is a fairly sort of negative configuration here. You've got this range play over the past month, and I'd say that the Aussie is likely to come back to test that 76 support area once again that we found the low sort of on Monday. So I wish you good luck in your trading on the Aussie, and I'll speak to you again later.